What's up, everybody? Welcome back. Joe Soto here, and I am going to respond today. Actually posted a question. I said if I was to do a Facebook Live and you can ask me anything you want about money, what would you ask? And I started getting a series of direct messages. Some people responded directly. So I'm just going to take them in the order that they came. And today's question is, what would you tell somebody who's starting a new monthly budget? What would you tell somebody that's starting a new monthly budget? So I would say the first thing as it relates to, I made a couple notes here. So if you see me kind of, following my cheat sheet. First of all, let me just say this. Most important thing for me is that, I teach what I practice. So what I'm about to share with you, it's really how I run my own personal finances. And that it has really liberated me from a standpoint of just having control of clarity, control, freedom, because sometimes money can be a little bit chaotic. It's like how do you keep track of your expenses, the money that comes in, the money that goes out? How much money do you save? How do you prepare for taxes? These are a really good question, and a budget is a central aspect of it. Because if you don't have your budget right, you're not going to be able to save. You're not going to be able to. Your tax situation is going to be a mess, and the money's just going to disappear. I mean, that's what happens. And I've been there before. I didn't always have a budget. Didn't always have my my financial house in order. Although I was, a practicing wealth manager. So today I'm going to share with you something that I've been practicing probably for the last 7 years or so, and really got it honed down in the last 5. But for the person who asked me about the monthly budget, somebody starting off with a monthly budget, I would say the first step is the awareness, right? Which apparently, if you ask me this question, then you're already there. You're already there because you recognize, hey, I need a budget. So that's important. And I hope you guys don't mind, but I'm smoking my cigar. It's Friday night, and the weather's beautiful out here in Georgia, so I might be smoking my cigar while I'm talking. So it make it a little bit more intimate. So spark up your cigar, we can smoke a cigar together. Anyway, so the first step is just recognize, hey, there's a problem. Without a budget, you're not gonna be able to accomplish much without a budget, unless you make an incredible amount of income, in which case you're not gonna be able to maximize your finances very much because you still need a budget. You still need to have a good understanding of where the money goes. So understanding that, hey, I have a problem, is the first step. So obviously the person who asked me this question, good job. You recognize that there's a problem. So, and again, these are steps that I did myself. I sat down with my wife. Highly recommend that you get your wife to sit down with you when you're talking about your budget. You can have one person, direct the finances at the house, but both people need to be involved. It's hard to be successful, if you are in a relationship and you're both not on the same page. So it's important, for you and your wife to be on the same page. So get your wife, sit down, pull up your accounts, and what you want to do is you want to take an inventory. So think about it like if you were running a grocery store You want to take a look at all the produce, all everything that you have in stock. That's your transactions. So maybe pull up the last 3 months and just go through the list. Go through the list and just kind of just give it a quick glance at first. Just kind of take a look at what's coming in, what's coming out. Um, and then what you want to do is you want to break down those those things that are coming out of the bank account. You want to break them down into two categories. Um, well, by the way, let me go back first. So when you do this analysis, right, and you just look at your expenses over 3 months for the first time, you're just going to see the outflows, where the money's going, right, and the inflows. But yeah, you might be surprised. I was surprised when I did this the first time, and it was like, whoa. Um, because this is really going to help you when you go to that next step. Um, Step number 3 is when you're going to look at those expenses, and you're really going to take a look and say, okay, what is a want and what is a need? And really what you want to focus is on the needs. So what's the needs? Like what are absolutely the things that I absolutely need? Um, and when I did this process, there was a bunch of subscriptions that I had, stuff that I use for social media, newspapers, investment research that I was using. And you're just kind of looking at all these things, and you're like, well, what is really a need? What is something that I can go without? So you want to separate, like maybe just highlight what are absolute needs, meaning that these are things that you can't go without. Obviously, your utilities are going to be in there, probably your healthcare premiums, your life insurance, things that you absolutely need, insurance premiums, healthcare, rent, mortgage, things of that nature. So you want to put all those things, all of your needs, and maybe just get a highlighter. Print out your statements, get a highlighter, and say, okay, this color, these are my needs. All right, so that's step number 3. Then on step number 4, you're going to identify your wants. And when you look at your wants, I promise you this, you're going to discover that there are going to be things in your expenses that you're like, man, I really like that expense. So for example, if you have a Starbucks issue like I used to, you're like, man, I really want that, right? But is that really a need? No, it's not. So you pull that out. You say, okay, this is an expense that's coming out of my accounts consistently, month after month after month, but it's not really a need, and it's something that I can do without for now. So you pull that out. You pull that out and just kind of put it in a separate category. Maybe highlight it in a separate area. A want that you can go without. That is not mandatory. That is not instrumental in you running your household or your life or your quality of life. And you want to put these in a separate category. Now, maybe I should have said this at the beginning, but there's something when we go about creating. First of all, I don't like the word budget. I didn't use it in my business with clients. It's just there's something about the terminology of budget that is kind of restricting, limiting, and I just think that it's important that when you go about creating a budget that you have an intention. Like, what's the intention of creating the budget? It can't just be like, so I can restrict the amount of money that I want to spend, or so that I can spend less, because this is like restricting. It's a scarcity type of approach. This is my personal philosophy, okay? So, I mean, I know there's probably thousands of different ways that people would answer this question, but I would say, set an intention when you're going to review your income statement. That's what I used to call an income statement. Just review your income statement, what money comes in, what money goes out, and set an intention like, why am I doing this? So in this case, the gentleman asked, "Hey, I'm setting up a budget, a new monthly budget. What would you recommend?" Well, set an intention for the budget. Probably should have said this at the beginning. Um, so what is the intention? And I'm gonna tell you right up there with the intention, it should be to pay yourself first. If people got into the habit of paying themselves first, no matter what, um, America would be in a completely different situation. You look at some of these articles when you see people, like 70 to 80% of people are living paycheck to paycheck. You know, I guarantee you that these people are not paying themselves first. And and the reason why I said that setting up that intention at the beginning is so important is because it's empowering when you say, well, I'm going to set up a income statement for my household so I can pay myself first. That's a lot different than saying I'm going to set up a budget so I can spend less. Does that make sense? And I think words matter, and the mindset and the approach, they matter. Um, okay, so when you go and review the list, you're going to separate the needs, the wants, and then identify the things that can go. And this is a very exciting process. It should be a very exciting process when you're identifying um, the stuff you've been spending money on that you don't really need. Because when you do this, what ends up happening is you're essentially finding gold to go into your savings. A lot of people, when I would meet people, a lot of times, they would need to save a certain amount of money to retire by a certain age and things of that nature, and they're like, "Well, Joe, I can't really do that, right?" So I would have them do this exercise, and they would all of a sudden find that they're spending, $500 a month going out to eat. I'm like, look, man, you don't have to stop going out to eat, but if you go out to eat, go out to eat less half of the time, we just found $250. $250 that can go towards your budget, towards your saving bucket, right? So essentially, we're hunting for dollars that we can put in the bucket to pay ourselves first. That's the intention. That's the setup. Okay. The next thing is what we're going to do is we're going to set up targets. And this is a really, really cool thing. I actually learned this from a book that I learned about administering business finances. And since then, I've applied it to my personal finances. Um, and and then, I've combined it with my wealth management approach. But the idea here is you want to set some targets, um, some ideal targets of what it is that you want to pay yourself first. So in other words, how much money you want to save. Um, set a target. And if you're like, Joe, I can't really save right now. I'm barely, making ends meet. Um, that could be your situation, or maybe you're already saving a lot of money, but you're still behind based on your goals. So this is a good way to do it, right? So we talk about incremental changes, right? I kind of think about like if you're one of these people that are trying to go to the gym, right, and you need to lose a lot of weight. If you try to go the drastic route and lose an incredible amount of weight really fast and really quickly, you might be able to achieve it, but chances are you're going to put it back on, right? Because it's not sustainable. So this process I'm giving you here is a process that has proven to be sustainable for me and sustainable for a lot of people that I've helped over the years. So the next thing we're gonna do is we're gonna set some targets. But what we're gonna do is we're gonna have different bank accounts. But this process right here, my friends, was transformational for me. Transformational. So what you want to do is you want to set up an account for you can call the account Pay Myself First, or just Me First. Okay, you know how you can give accounts nicknames. So you set up an account strictly for that. Or you could just call it savings. You can set up an account for taxes. If you have a tax liability at the end of the year, probably not a bad idea to set up a tax account anyways, just in general. Because you know what I always tell people, I say, man, if you really practice this system I'm giving you, eventually you're going to have tax problems. So it's a good habit to practice, even if you don't have tax problems. Now, if you do what I'm telling you, it's going to set the mechanism in place for you to actually be in a position where you have to start putting money away for taxes, right? Because the more money you make, you know, when you start having when you start making more money, you're going to have tax problems. And by tax problems, I mean you're going to have some sort of system in place to ensure that you have enough money at the end of the year. So when it's time for you to pay your taxes, you have that in place. Anyways, I digressed a little bit. So the first account is a savings account. Or you can call it Me First. Second account is a tax account. The third account, we can call it the income account. And what is the income account? That's where all the income from all sources of income. So let's say if you're married, you put your husband and wife's account, the husband and wife's income to go to this one account. So you have an account that's named income, and in that account, you have all the income that goes to that one account. Okay, then you're going to have another account that's called an operating account. Okay, and the operating account essentially becomes your budget. Okay, listen closely to what I'm saying. So when you go through that list, right, and you go through your monthly expenses and you go through your needs, right, what you're going to do is you're going to take all of those things that you absolutely need, and some of the wants, and you're going to create a budget, right? And what you're going to do is you're going to say, okay, well, this budget, right? So I'm going to give you an example. So let's say you make $100,000 a year and you need $50,000 a year to pay for your obligations. Then your target, your operating budget for your operating account should be 50%, right? So 50% of every dollar that comes in goes towards mandatory expenses, wants and needs, right? So you're gonna have an account that's called operating, and then something that I've included in the last couple of years, I call it the God account, where I place money, and I give some of that to the church, and I give some of that to situations, you know, that God puts into my path, you know, people that are in need, help family members that are struggling with something, strangers, you name it, and I've allotted a percentage to that. So when you look at this account, when you look at the savings account, the tax account, the operating account, and the God account, when you add up all those percentages, you're going to equal to 100%. So what you're going to do is when the money comes in during the month, you're going to put all of that money in your income account, right? So let's say, you know, the wife makes, you know, I'm just going to throw some numbers out there. Let's say the wife makes $1,000 and the husband makes $1,000, they have two direct deposits. You're going to have both of those direct deposits go to the income account. Once it hits the income account, then you're going to divert a percentage that goes to savings or pay yourself first. Okay? A percentage that's going to go to taxes, a percentage that's going to go to your operating budget, which is what you need to pay for your monthly expenses, and your God account, right? I will say that, I added this. I had a friend of mine that was like, "Hey man, you should set something up like that." So I followed his instructions. But full disclosure, when I first did this, I didn't have a God account. It became kind of like that extra account. So let's recap here. So we got 1, 2, 3, 4. We got 5 different accounts, right? So you have all the income goes to the income account, and then you're going to set targets, right? So maybe you're in a position where you're saving a lot of money. You need to save a little bit more, and then you're going to set a target. So if you're saving, let's say 10% of your money, but you need more money so you can retire sooner, then maybe your current allocation to savings is 10, but you have a target of 15 or 12 or whatever the case may be. So you have a current and a target. The current is what is right now. Again, with taxes, if you don't have tax issues, maybe you get a refund at the end of the year. It's always good to just put 1% of money in taxes, so you can get into the habit of thinking. So what you're looking at this is you're looking at a system that's manageable, that you can use, that's very easy to achieve. So on a monthly basis, you have all the income come to the income account. When all the income is there, you're going to take that pool of money, say 1,000 for the husband, 1,000 for the wife. You bring it all together, you have 2,000 in money coming in, and then you have the savings, the tax, the operating budget, and God money, and you distribute it based on your percentages. Okay, so let's just say that's January, right? Because the next thing I want to share with you is something that happens on a quarterly basis. So in addition to these accounts that we set up, you're going to set up a saving account and a tax account that's separate from where all of your all your money stuff is right now. You like, so if you have a main account at, say, Bank of America, you're going to set up these other accounts, maybe do one of those online banks or something. Just trying to keep that money separate. Keep those accounts separate from your main accounts, so you're not tempted to go in there and start messing with that money, So you're going to set up 2 accounts there. You're going to set up a savings away account, and then you're going to set up a tax away account. So once every 3 months, what you're going to do is you're going to take all the money that has built up in your savings and all the money that has built up in your taxes, and you're going to transfer it over into those away accounts. So I know this is probably a lot more than you bargained for. But the gentleman that asked me about this, how do you set up a budget? You're setting up a new monthly budget. But I mean, if you go back and listen to this message, this is a complete answer to something that will work. So let's recap, shall we? First step is awareness. The second step is take an inventory of where all the money's going, meaning take an inventory of how much money's coming in, how much money's going out. The third step is to evaluate what are the absolute needs. The fourth step is to identify what are the wants. And out of those wants, which of those wants can go? Maybe you're paying for a subscription of a magazine or a streaming service that you hardly ever use. What ends up happening is when you start adding all these things up, I mean, they can add up to hundreds and hundreds of dollars. And over a 12-month period, it can be thousands. So, and the reason is because when we set up this income statement / budget, the objective is to set an intention to pay yourself first. That's the intention. Okay, number 5 is to set targets. I think I might have overlooked this. It's kind of important when I was going around. when you first start saving money, one of the first things you should save on is creating an emergency fund. An emergency fund is 3 to 6 months worth of expenses, of your basic living expenses. That means, if you have just set up 3 to 6 months worth of your monthly expenses. So if you're spending, $5,000 a month, then try to have $15,000 in an account separate from all your other expenses. Call that your rainy day fund, and that'll be a good starting fund. Step number 6 is setting up the bank accounts. Set up a savings account, a tax account, an income account, an operating budget account, and a God account. You can keep that all in the same bank. You can keep up those 5 different accounts and give them a nickname so you know what they are, and then put on there how much you're currently putting in there, okay, and how much you want to put in there. And if you're in a position right now where you say, some people may say, well, Joe, I can't save. Just put 1%. 1% of your money. Like, build off of 1%. You can save 1% of your money. You can cut your expenses by 1%. And then start at 1%, and then eventually that can be your current target, and eventually build to 2%, 3%. And then as the money comes in on a monthly basis and it gets distributed into these accounts, you're going to set up 2 accounts that are away from your main bank, a savings account and a tax account. And at the end of the quarter, you're going to take all that money that's in the savings and tax account, and you're going to transfer it to those outside accounts. And I would put nicknames on those accounts as well. Okay, I think that pretty much covers it. I hope, my friends, that you got something out of this message today that can help you with your current income statement / budget. This was a response to a question that I said, ask me anything about money. If you can ask me anything about money, what would you ask? And this was one of the questions that came through. I received a ton of questions, so my goal is I'll probably take some time tomorrow and answer another one. But listen, if you got something out of today's message and you want me to answer a money question for you, okay, leave me a comment down below. Let me know what question you have, or send me a private message, and let me know what your main takeaway from today's video is. All right, my friends, I love you guys so much. God bless. Go in peace, and I'll see you guys in the next video. God bless everybody.